What up, YouTube? Back with a portfolio update. This week has been crazy already. If you look at the week chart, we're up 9 grand, which is just insane. And this is a lot due because I sold my AMD LEAPS. If you guys are not aware, I had a long position on AMD through a deep in the money call that was expiring 2028. So that's called a LEAPS option. Just a strategy. If you're curious, I'll do a deeper dive into what leaps are and how they work into another video. But for today, we're just doing an overview of my AMD contract. And I ended up buying that contract for 15.3, and that was a couple of months ago in January. And then I closed it out at 27.4. So I wanted to do an overview on how that happened, my conviction on AMD, and why leaps are a superior way of going long whenever you have a strong conviction on an underlying. So let's dive into it. We actually got close to an all-time high today. Get my face out of here. So let's look 176.50. So super happy with this, getting really close to 200. And that big jump in just a couple of days mainly due from AMD. So definitely got a little lucky there, but also had a good bit of a conviction. And whenever opportunity means preparation, you get luck, I guess. I don't know. This market is just kind of insane. Earnings week is this week and the following. So let's see what happens. Robinhood is actually trading down 10%. I just checked a couple of hours ago. So kind of insane. Google, Microsoft, and Meta, those are all big positions for me. If you look over here, I have another leaps on Amazon and one in Meta. So I ended up selling my AMD position because I had an 80% return. And at that point, I was just overweight leaps already with the AMD position not running so much. So that was a big thesis as to why I sold. But let's do a deeper dive and let's get into the contract that I sold. So let's just take a brief moment here and look at AMD price action. So this massive run happened last week where they were up 27%. And just in one day, look at this gap. Look at this gap up. That was like a 10% run in like one day. So I'm like, holy shit, my contract's exploding in a good way. And I'm like, I have to sell this. Like, this thing is going crazy. It's going parabolic. My contract expired in 2028. So I have time to hold it. But whenever you see an opportunity like this, whenever your contract's up 80%, you're just going to take profit. You're not going to be waiting and not get greedy of being like, oh no, this thing can double again. Like, that's just ridiculous. So I ended up selling April 26th, and I booked a $12,100 win for a 79% return on my capital. So pretty happy with that. And I ended up buying that contract in January for $15,300. And I'm scrolling down so you guys can see when I sold it. And then I sold for $27,400. So I sold on the 24th at 8:51 a.m., which it was kind of the top. I don't want to be that guy, but I just saw price moving so fast that I'm like, there's no way this is going to hold. I honestly think they're going to trade down on earnings. A lot of big tech is already trading down on earnings, given OpenAI's statement of their compute needs not meeting their expectations and them might not being able to fulfill on their contracts, which can be pretty catastrophic. But, the market is just overreactive, as you guys know. So we actually traded down on AMD these last couple of days. But you guys saw down there, that's my leaps option that I sold back to the market a couple of days back and ended up booking a good little win. And let's talk about why I went long with leaps. So I bought one options contract that had an $80 strike that was expiring in January 21st, 2028. And this is deep in the money. So this thing was down to like 95, 96 delta by the time I sold. And whenever I bought it, it was at around 88, right? So the contract was worth $15,300 when I bought it. And why did I do that? I get a lot more exposure for less money by buying a contract like that. But it's not all just free leverage. You have to pay with Theta. So Theta represents time decay. So every day that your contract is in the market, that you own it, it goes down by how much Theta is. So we'll exit this for a second. I'll show you guys Meta and how that looks. Let's go on Amazon. So this contract's expiring on January 1st of 2027. So Theta is starting to ramp up a lot more. So let's go down to the Greeks, and this is going to make more sense. So every day that the day goes by and the market's open, my contract's going down $2.59. And that's not that much money because my delta is at $97. So theta or time decay is extrinsic value. So that's essentially time at premium. So the market is like, hey, this contract could move up or down. So we're going to place a premium on that and we're going to attach it to the price of the contract. But given this contract's already so deep in the money, the market's like, okay, the odds of this thing being out of the money are so low, we're just going to take away some of that premium and not bake into the contract because we don't think this is going to move our way. They're essentially saying, this contract might not reach break even by expiration. So time premium is not going to be such a factor anymore. So a very brief explanation on the Greeks. I mean, we could do probably like an hour video on how it all works, but I just wanted to do this as an example here. And why did I go along with AMD and why did I go along with LEAPS? First, because I had a high conviction on the AI and CPU trade, and I thought AMD was the best player in this industry, and I still think they are. So I went long. I bought a contract back a couple of months ago, and I wanted to have more exposure to this stock. That's why I bought a LEAPS call. And if I were to spend $15,300 to buy shares, my exposure would have been a lot less. So whenever I bought that contract, I had exposure to around 88 to 90 shares of price action. I only had to put up a fraction of that money, a lot less. So my $15,300 work a lot more effective. So I don't recommend you do this with your whole portfolio. When it goes right, it goes well. But whenever it doesn't, you just got to let them crash and burn because data is going to start eating at them. Your contract's not going to be profitable. And, I think you should allocate 15, 20, 25% max of your portfolio into LEAPS. And we'll do a broader video on how I strategize on LEAPS. But I'm just bringing a portfolio update on my account. But, my thesis had already played out. I thought AMD was going to reach the 300s, the 350s, and it actually reached that way faster than I expected. So I sold. I mean, I'm not married to any of these positions. Whenever I see something run, I sell. I take my money, pay my taxes, and wait for another trade. Like, I think a lot of people get married to their positions. They're like, I'm not going to ever sell this Google stock or this AMD leaps, my Meta leaps. Like, they don't owe you any money. If you're 80% in the money with your leaps, like, just go and sell. You know what I'm saying? So don't be silly. If you're up a lot of money, if you're in the AI or chips trade, if you're trading SanDisk, Micron, any of those companies, you're probably up a lot. Just take some profits. It's not financial advice, of course, but this is a very cyclical market. We could see SanDisk, Micron demand go down a lot in the next coming 12, 18 months. They're not necessarily like a staple like Google is, for example. So, take what I say with a huge grain of salt. I'm not a professional or a financial advisor by any means. The other thing I like on Leaps, and this is my last point for today on Leaps, and I'll stop fanboying over them, is they have time for your contract to play out. So you're buying an option, right? I'm not the biggest fan of buying options, but whenever you let time do its thing and stocks go up over time, historically speaking. So if you buy a Leaps on any blue chip, you're probably going to be fine. Like, unless we have some other major recession in the next coming years, which there's always an option, there's always a possibility that could happen. Not likely, but let's say you buy a Leaps on Microsoft. I think that's a great company to go long. You're probably going to be good in the next couple of years. This is, of course, not financial advice. It's just if you're bullish on a stock and you want some more exposure and you have a little bit of cash to buy a proper leaps contract, then go ahead and do it, because it's important to buy the proper leaps contract. Because if you buy, let's say, a deep in the money call, but you buy like a 60 delta, you're actually giving up a lot of money when it comes to extrinsic value. So theta is going to be a lot higher for your contract there. And every day that goes by, your contract's going to lose a lot of money. But if Microsoft just explodes in a month and they go up 30%, then yeah, like you're good. But, is that going to happen? I don't know. I don't like gambling like that. But, that's why I think it's important to buy a contract actually very deep in the money from 80 to 90 delta. Make sure there's enough liquidity that you can sell the contract later. But liquidity is not the biggest problem. There's always a buyer and there's market makers that can make the market for that contract. But anyways, I'll stop blabbing on leaps and I'll do an update on the portfolio. We're at 168.9 for today, a little bit down on after hours. But for now, we have our Amazon leaps and Meta leaps, and Meta being my biggest position at 36.6. So super happy with this. I'm very bullish on Meta. We have some cryptos, and then we're still holding our Google shares. We'll see what happens with Google. They're trading at an all-time high here at 349, and they could make a race for 400 and become the largest company in the world, which is, I think, pretty sick. But we'll see. I mean, there's definitely a good narrative behind Google with their own TPUs, and now they invested $40 billion into Anthropic. So they're a big player into AI, TPUs. They're kind of trying not to rely so much on NVIDIA now. That's why they're building their own chips. But the thesis is great with Google, in my opinion. Great buy. They are trading at a premium right now, so be careful. But Netflix is actually trading down a good bit. Netflix just does whatever. I'm long Microsoft. We'll see how this plays out. I'm actually long Microsoft with 2x leverage here with MSFU. We'll see. I don't know. Microsoft has its way of like bouncing back down somehow. This is my first time trading Microsoft and going long Microsoft ever. So we'll see how he behaves. Amazon's finally catching up to its other compadres in the Mag 7. They're trading at 259 and they had a massive, massive month. Let's go into Amazon right here. We'll go to the month chart. They had a 28% month. That's crazy. I think the market's finally catching up to Amazon in its power with AI, robotics, logistics. They're investing a ton of money into AI. And I think that was the whole narrative why the stock went down in the first place, followed by Meta and some of these other ones. But when we look at the 3-month, they're actually recovering pretty well here. And my leaps is getting to expiry in January. So I'm going to have to start thinking about selling. But when we come down here, RVI, which is Robinhood's venture fund, and they just actually invested into OpenAI, which I think is super sick. They have a couple of different cool private companies in this fund that they have exposure of. This thing moves insane too, which is just crazy. 13% down in the day. Like, what the hell? 18% up on a week. Jeez. But I have a couple of shares here just for fun, and it's cool to have some exposure on this. They have 10 total holdings, and you see they just invested into OpenAI, which I think is pretty cool. Databricks is one of their biggest ones. Revolut, Mercor, Airwallex, Boom, Aura Rings, that company, Ramp, and then they have some cash. So Ramp is so I'm fairly familiar with Ramp. They're a payment processing platform. Not sure exactly what they do in detail. Aura Ring, they're a wearable company. And Databricks, they're a massive AI and data analysis company. I think everybody at this point's aware of Databricks, and they just invest into OpenAI. So it's a cool little fund, getting some exposure into a little bit of a different asset. But let me know what you guys think of this video. And thank you for being here. I want to see you guys win. Let me know in the comments if you guys have any ideas for this channel and just the portfolio in general. And don't forget to leave a like. I'll talk to y'all soon.